Good evening. This is Coach Mike from WinningStockCoach.com. Going to discuss a little bit of my market overview for the upcoming week. Last week I gotta admit it kind of threw me for a little bit of a loop, and here's why. Let me explain that. Since November, I've been speaking to members of the coaches roster at one of the services, WinningStockCoach.com, about how I believed the week of March 3rd would end up leading to a market high. Last weekend, with all the news from Russia and Ukraine, obviously it kind of made me look at things and say, well, you know what? I could be off by a week. And that's some stuff that, could affect the markets. We saw that effect on Monday. Markets gapped down before quite the rally Tuesday through Friday. As it stands right now, I've been covering these on a long-term channel, the indices that we've talked about in our market overview video, and even though I didn't think it could do it, it actually went and peaked and tapped right at the top channel line for the first time since April of 2010. So we got that little breakout and peak. Now, this could actually be viewed as many things, so I want to give you an honest interpretation of the charts here. Some people may say, well, this darn market, people have been saying it's topped out, but it keeps running, and hey, I will actually applaud you for stating that, because in reality, there's different levels on a chart for what we should look for as far as danger signs and what not to be worried about, regardless of what the media is presenting and such. So let me discuss with you where that would be for me. If you look here at my weekly chart, you see this little move for this drop down in January, where we came up and did what's called a double top on the high. Had a week where it kind of came down a little bit, and then this past week, breakout. This is commonly referred to as a parabolic move, a parabolic breakout, a double top breakout. It's many names for the exact same thing. When you talk about trading in general and how individual stocks will relate to the indices themselves, I don't think you have any fear whatsoever, unless the line that marks the double top, which would now serve as support, were to be failed. And then I'm not sure you would have anything to fear unless it came down and made a lower low than January's low. I'll be the first to admit that I'm quite shocked to have gotten that move last week. I don't think I'm the only one that's quite shocked, especially with how the markets opened up on Monday. But as far as something I tell the members of the coaches roster all the time, you have to look at a chart for what it is doing and not for what you want it to do, because in doing that, you will be more successful. So, as it stands, on a breakout, with momentum, and actually increased volume traded in the SPY, the Spider ETF for the S&P 500, this past week, is it possible that we continue upwards in the coming week? Absolutely. It is absolutely possible that we continue upwards in the coming week. Is it also possible that just on this breakout pattern alone, that we come down and retest this line as support before moving further to the top side? That's very possible. It's actually a common occurrence in this type of pattern. You get the breakout move, and eventually it comes down and it does retest this line as support before moving again. Is it also possible that we look back at this time where the top channel line was placed, April 19th, and look at how it actually did the exact same thing, where it did a parabolic, a breakout, and then incurred its hardest fall, second hardest fall since the markets bottomed in 2009. 2011 brought a pretty tough pullback. But I'm going to tell you, I don't know that fall, if this were to happen, wouldn't simply lead to buying opportunities. Because as you see here, as it fell and pulled back into really the mid-level of this channel, about midway in between, and I can actually easily demonstrate that with this tool here. There we go, there's a midline on the channel. And it pulled back right into that midline area and actually created a very rapid ascending movement, ascending meaning upward, to new highs again during this time. So we got to look at the chart for what it is and not what we want it to be. And currently we have a technical breakout being displayed, a breakout where the support is the breakout point, and the bullish or bearish nature will be determined on a reaction based on that price point, and nothing other than that. At this point in time, your long-term positions that are doing well, let them do well. Be prepared if needed to leverage those positions by the purchase of put options. If you're trading deeper in the money put options against a common share long position, you will actually find more times than not, and very dependable, that any loss seen in the stock is made up by the gains on those puts. And you would have to purchase one put for every 100 shares you own. What a put option is it's a right to sell at the stock price, or at the strike price, I'm sorry. So that's something we regularly do with the coaches roster to protect common share positions. When you have a good option strategy to go alongside with your long strategies on securities themselves, you don't ever have to sell for a loss. And you can feel quite comfortable in knowing that. So it'll be interesting this upcoming week. I think when I look at some individual sectors that had some good movements this past week, financial stocks in general, I'm a little concerned with the rate in which they did move the last few days of the week. I wouldn't be surprised to see a little bit of pullback in the financial sector, which could give a little bit of a drawback to the S&P 500. I'm not certain that pullback will be a bad thing. It may just be an opportunity to buy. And that's something we'll be following very, very closely in our chat room and discussing regularly. We're going to look now at the DJI chart. This is the Dow Jones Industrial Average. Unlike the S&P 500, the Dow Jones is kind of struggling to get into that top area of the channel. And where I showed that double top breakout point, the parabolic breakout point on the S&P 500, the DJI is actually right at that point. One concern I'd have over the DJI, just looking at the chart alone, is after making this high from this low, the January pullback created a lower low. And if we began to pull back from this point here, that would show me a lower high has been made. Now, a lot of people freak out about the movement of the DJI, and they like to really focus on the Dow Jones Industrial Average, which basically corresponds with about 30 stocks, where the S&P 500 is much, much more. As an indice I follow, I'm more secure following the S&P 500 because more of the stocks I trade, you trade, and everybody else seems to trade correlate with the movement of the S&P 500. So, when I base my strategies for trading and for how I see the markets, it's more based on that S&P 500. Could the S&P 500's breakout last week give a little bit of energy to the Dow Jones Industrial Average to break it above that double top? Absolutely. A couple technical differences in this chart as opposed to the S&P 500 chart is the S&P 500 was not coming off of a lower low. And just understanding the technicals and having a plan for them shows me that any pullback lower than this high that's marked on the chart after a lower low would be an indication of a lower high, which is by any definition a bearish indicator. So for the bulls out there, and yes, I am a natural bull, I definitely one that strategizes to the bullish side, we need to hope for this breakout. With the way some major contributors in the Dow Jones Industrial Average ran at the end of the week, I wouldn't be surprised to see a slight pullback, but it may be something that we see for like a day before this ends up breaking out. And remember, this is the weekly chart that we're seeing, so nothing that happens Monday, Tuesday, Wednesday, or Thursday really matters. What matters is where we close on Friday. Sometimes that's a harder thing for shorter term traders to understand, but that's why most shorter term traders don't do well and are out of money fairly quickly as far as what the statistics show. Even though I'm not a buy it and hold for 20-year guy, being a swing trader, I'm one that looks to identify and catch each individual swing, each individual up and down move on the charts I play, where the day traders are constantly freaking out by what happens in a 5-minute period. And by understanding what the chart needs to do to verify something, what the chart is supposed to do based on the chart patterns it is showing, and simply having a plan ready to execute based on those things, is the difference in whether or not you are successful as a trader. And these are things that I'm constantly working with the members of the coaches roster, with our live lessons and evening webinars, and the depth of our watch lists and our trade plans that we send out. It's really to prepare them for what the market could do from these points and not for what we want them to do. Finally, we're going to look at the Russell 2000, commonly known as the small cap index. And this one is the most interesting. Much like the S&P 500 coming off of a higher low than this low here, it's broke that double top period, made a higher high, but it actually broke above the channel from the tops made back here in 2011, April 2011, and here in April 2010. So even though it just closed barely above, the chart is still showing a close above this long-term channel, which could also be a cause for another breakout move aside from the breakout from this double top. If you look at small caps in the past week, you saw many of them performing very, very well. National media and such covered a few that we traded in our chat room for really good gains. PLUG was one. ARTX was a defense contractor that just blew up on us. I mean, it was an amazing return. Did very well there. FCEL, BLDP. We actually had several of them this past week. Small caps that performed very, very well. And they helped drive this type of move here on the Russell 2000. So when I look at the Russell 2000, I'm actually very, very intrigued as to what we could see on Monday. Because from this breakout, not just of that double top, but of this long-term channel line, and closing just barely above it, but still above it, we could see one of two things. A very, very intense breakout move further upward, with a support being used of this upper channel line now. Or we could see this literally react in a move that was, I guess would be most simply explained as, oh shoot, I'm not supposed to be up here. At which time it could retest the breakout line, this horizontal line, from the previous double top, the parabolic breakout that was made. So again, with the Russell 2000, much like the S&P 500, we are waiting with a support level, and we're not in danger on any long-term positions unless it were to fail this support line, and then we have to simply have a plan that we react on. This is Coach Mike from winningstockcoach.com, encouraging you to check out our services offered, look into the coaches roster, and subscribe even to the Practice Squad, my free newsletter, where I regularly send out educational material and such that will benefit you in your trading endeavors. If you want to join us in our chat room where I'm on the microphone and teaching on trade plans and charts in general every day, all day during trading hours, and also for several hours each evening and on the weekends, subscribing to the coaches roster would be a great supplement to your trading so that you and I could partner together to begin your process of achieving financial freedom. If you have any questions, you can email me, coach@winningstockcoach.com, and all the information is available at winningstockcoach.com for you to be able to look into what we do with recent trades, member testimonials left on the website, and get an idea for my trading styles and teaching styles overall. Best of luck to you in the upcoming week. God bless.